Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yeah, Bitcoin on the 4-hour. Very quickly, we will just go over to the S&P futures market here, because you can see we did get a very good close, close to business yesterday evening. A very nice break through this horizontal resistance, clean all the way through 4400, actually closing well, as you can see where we closed, just 4428. So yeah, you can see in the context of this move, it looks good. If we close at these lows, then obviously people would be observing this market over the weekend and being like, well, what should I do here? Maybe I need to dump. Maybe we're going lower. But they'll look at this, and it is quite promising for us to potentially hold within this area here, then push on upwards above that. What I think would be the sign that we then will see a decent medium-term move to the upside. And in all fairness, would be hard to see it not move onwards and upward to new highs, but yeah, that would be 4500, and as you can see, we're halfway there. As long as we can get supported at this support level and not break back below, yeah, things looking good. So this is basically what is giving us this bit of a bid in the Bitcoin market. As you can see, it is still not looking quite as good as the stock market, so we're not even above this previous high here, but yeah, nonetheless, it is good to see. It could have been a lot worse. We could have had a pretty negative close to stock markets, and that would have weighed on investors' minds and sentiment over the weekend when they're just deciding what they're going to do whilst they're sat in their rocking papers reading their financial times. But yeah, so that is good. There are lots of alarm bells though ringing in these markets though. There are a lot of cross currents at the moment. There are a lot of things going on that can go either way. There is inflation. There is the fact the Democrats need to try and placate that 40% of the American populace that has less than $1,000 worth of savings that are not hedged against in the inflation, as in hedged, i.e. by having like assets or savings or shares, stocks or cryptos or bonds or whatever. Well, not so much bonds, obviously, but yeah, not hedged against inflation. And those guys are obviously a significant voter base. That we've got midterms coming up. So yeah, I mean, they've got to at least try. I mean, right about now, without getting too political, it does seem like the Dems are gonna struggle. They're gonna struggle to put it bluntly. But yeah, they're still gonna try though. They're gonna have to try and do something. So I mean, they're kind of stuck between. They've literally stuck between collapsing markets and causing a recession and deflating prices that way, or just having to run along with inflation. So not many people no one is really talking about it at the moment. But in my humble personal opinion, I think that there is the alternative of the whole UBI stimulus sort of thing that would probably get passed quite easily. I know they'll say it's inflationary, and it is inflationary, but if you look at some of the supply chain things going on with inflation, the people not wanting to go to work, I mean, the inflation kind of bait, basically. Inflation can come down, so maybe they will look at something like that. That would obviously be weak for the dollar, would be great for stocks, it'd be great for stocks on the basis it will show they're not really going to fight inflation. They're just going to, well, it's going to be a Venezuela, isn't it? According to George Gammond, I think he coined that phrase, a Venezuela. So yeah, I mean, at the end of the day, like I've been saying, we're in a Ponzi. You can't taper a Ponzi. Deflation is the enemy. Crashing asset markets causes deflation. It just can't happen. The system's too leveraged. The system's too indebted. The system is is not looking too healthy for, but yeah, for want of a better phrase. So yeah, we'll have to see what happens though, because obviously the market, a lot of finance professionals are working on the assumption that there is a Fed put, but that Fed put is quite a bit lower in the price action of stocks than what the market thinks. And yes, the Fed may come to the rescue if markets collapse. So yes, you may think, well, it's going to be okay, but you kind of have to navigate that initial drawdown. Obviously, for navigate that initial drawdown. To then obviously, yeah, before the cavalry comes rushing back in. So yeah, lots of interesting factors, lots of factors. The main thing though, putting the squeeze on the market is the dollar. I think the market is waiting to see what happens with this trend, with this break above obviously this important level. Do we get the forward check, the back check? Do we get supported of this and bounce onwards and upwards? Like, yeah, pretty aggressively, or do we kind of put in a top here, hit this support, bounce, maybe put in a lower high, maybe even put a slightly higher high, come back down, lose this horizontal, trade back in this area? I mean, I do think the market wants to see what is going on here. There is there is a massive disconnect between the amount of rate raises that various market participants are expecting this year. There's a dichotomy between basically equity investors and basically bond investors. I mean, because the bond market literally tells you how many rates they think they're going to be. So yeah, one of those is potentially going to be wrong. Like I've been saying, I think there is the wild card scenario that yes, the bond market is wrong because whilst inflation is high and rates have to go higher, maybe the tightening doesn't come and they just let inflation run hot, and then we just do some airdropping some more stimmies in the form of some sort of UBI or something. But it is a bit of a wild idea. But like I said, this market is struggling, and I've observed markets for long enough to see crazy stuff that you wouldn't think happen basically. Like QE, when it first started, like it was meant to just be like obviously QE wasn't even QE, it wasn't called QE1 at the time, it was QE. I remember that, and it was like this is a bit wild. And then obviously we hear about the PPT, and then the Fed buying bonds, and then off balance sheet special investment vehicles and all that cool stuff to hide things, to buy, to do whatever you want. I mean, you do realize that there are lots of things that go on, and it isn't so to expect anything wild is not out of the question, just because, like I said, I've seen so many different wild things occur, policies and just all that cool stuff that you never really would imagine beforehand. And then yeah, I mean, here it is. I mean, when QE, obviously, I mean, back to QE, when QE was first announced, like, I mean, it's like, it was a bit crazy, but if someone said basically we're going to have QE practically forever, QE infinity, is never going to stop for like the next since 2008, so yeah, literally 14 years. Yeah, it is mad, guys. Gold whacked. Look at gold, obviously whacked with this dollar move back at its important support level though. You have to feel the pain of the gold bugs and the Peter shifts. I mean, they were hoping this would be a move up, and then absolutely slammed back down in unceremoniously. Not ideal for them. Oil is obviously, we know this is structurally bullish. We know that, but obviously it is getting driven. It is getting an extra bid from tensions over in the Ukraine. So we have to see what happens with that. I don't think there is any way at all the US can do anything other than basically try and placate Putin because simply because of inflation. Because if you drive these oil prices even higher, you just got a bigger problem with inflation. And I just think that ultimately, I think that is the be all and end all for the administration at the moment. Because yeah, they want to at least try and get re-elected. So that is what's going on there. 10-year is looking like it is putting a topping formation. As I have been saying, I don't think this can push much higher, because either basically, well, because the Fed can't do its raises, and if it does do its raises, it will basically cause a recession, and obviously bond yields will come down. So that's literally what I've seen here. I don't think if this does push to 2% or higher, it's done. It is game over. We might as well pack up our balls and leave. Yeah, it is going to be toast. It is going to be like massively disruptive, to say the least. But like I said, I think this is topping out. I think this has to come back down. We shall see. We shall see. The dollar, on the other hand, I have less conviction with this, because the dollar is like a relative trade. It can do whatever it wants. Interest rates, oh, that is the interest rate. Do you know what I mean? That is the what the yield is. This is a relative. This is just the dollar against a basket of currencies, or fiat. Basically free floating currencies doing whatever they want. So yeah, let's have a look at Ethereum USD pairing. Not doing a lot at all here. The Ethereum Satoshi pairing, not doing a lot. Trying to put in a bottom here, but not realistically not doing a lot. The Bitcoin dominance actually has now come up, hit our longer term trend line ish. We call it a trend line of sorts. I mean, we could maybe draw it a bit of a better place, but maybe I'm gonna have to go into a larger time frame chart to show this. It is the descending broadening wedge. If we have a look here, yeah, descending broadening wedge, swing fairly above and then collapse underneath, and we're currently getting guided down by it, as you can see. This is a highly bearish looking formation, highly bearish. So yeah, I mean, for this to break down though, we would have to basically see lots of risk on in the crypto markets, i.e. Bitcoin going up, stock markets recovering, maybe even that crazy UBI theory or whatever, so we can start all slanging poop coins for a living again. Maybe that's what will happen, but hey, we'll see. But this is looking bearish. Obviously it doesn't have to work out. We can break up. We are obviously at a point where we break high from here, then yeah, then it can still be bearish, but within the context of a horizontal channel. But we want it to break down. We want these markets to turn around. We want those stimmies, those UBI. Do whatever you want with those Finance 1.0 fiat fund coupons, and yeah, just pump orange coin, and then obviously other coins too, please. What else? Nothing else really I wanted to look at here. Let's look at Nas coin. Nas coin obviously not looking as good as the S&P, purely on the basis this is a lot of tech stocks. And yeah, tech stock, we're obviously seeing the great rotation. It's been a couple of weeks of rotation from growth to value. Let's see if that a lot of market participants, financial professionals, are thinking that is the start of a longer term trend. But we shall have to see. We shall have to see. So yeah, yeah, that is about it. Let's have one final thing. Let's do one final thing and look at those stochastics. The main thing is that 5-day and weekly that we're looking at. Let me just get back up again, sorry. Yeah, 4 hour moving up, we've got room to run. 10 hour moving up again still. 12 hour looking great, daily looking good. 2-day looking, well, turned up here, but obviously they're waiting to get, what should we use the Fed term, they're waiting to get lift off. Liftoff's coming off in March. Liftoff is coming in March. Liftoff is basically when they raise rates. But yeah, liftoff. 2-day looking to get liftoff. 3-day looking to get liftoff. And then here with the 5-day, we want this to turn back up. 5-day turns back up. I think that is a good indicator we'll be in for a good bounce. And once that gets moving, gets a weekly going, like I said, a good bounce. Like, who knows where this market is going? Let's look at it on the weekly time frame. Who knows where this market is going? But lower high here. And then do we then just come in, sorry, higher low, and then do we put in a lower high under around 50,000, or do we break into here, get people bullish, swing failure, not quite a swing failure, but do we push the new all-time highs then come down? Yeah, it's all to play for. It is all to play for. We will observe all this in real time. We are pretty much fixed on what Finance 1.0 does, what the Fed does, what they decide to do with inflation, all that fun stuff. So yeah, interesting times, interesting times. Ultimately, we all know we are potentially coming into some sort of very difficult times unless some new exciting policy tool comes out from either the Fed or the Treasury into Q2 and obviously the end of Q1 as well. We're going to hit difficult times. So, but like I said, do not do not underestimate the ingenuity of these people to just keep it going. So yeah, there we go, guys. Remember, this is not a financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.